have a look at this with a fresh set of eyes, because you're going to see in short order incredible amounts of deficit spending here in Canada, incredible amounts of deficit spending in the United States, yield curve control, additional tariffs, additional capital controls. If I had told your listeners, Mike, that in December, I think when I was on here last, or January, if I had told your listeners then that during a Canadian federal election campaign, the candidates would be discussing that Canadians could expand their TFSA contribution by $5,000 if they give that $5,000 in its entirety to pre-approved Canadian companies, that would have sounded nuts, because that's like soft capital controls.
Yeah.
And yet that was on the platform, Mike. Like the first salvo for capital control should be 5%, not almost 50%. And, when you look at all these things taking shape around you, as you mentioned before, and as I've heard many of your guests discuss, and as we discuss on our program, by the time you need Bitcoin because you realize that something is awry in the traditional financial system, or that too many people are telling you where to put your money, or that the incentives are slanted in a way that forces you to lose on your investments as opposed to win, it's going to be too late. It's not too late now. Spend some time, learn a bit about it, and you'll be glad you did. It will influence the way you think about money and finance in ways that you could not have imagined. Certainly it's done that for me, and I could point to hundreds of other very similar cases over the years.
One of the most fascinating aspects, I think, of the financial markets over the last, half dozen years, you can make an argument it goes back much further, though, is the advent of Bitcoin. Joey Temprile has been on top of that with the Canadian Bitcoiners from the get-go. Joey, first of all, I appreciate you taking time. And, my big thing is you just watch the mainstream acceptance of this. And I mean, obviously propelled by what's gone on in the US with President Trump's attitude, which was quite different than what we were experiencing before that.
Yeah, it's great to be with you and your listeners, Mike. Thanks for having me again. I couldn't agree more. We were chatting before the show about the difference now between the ecosystem around Bitcoin and the environment around Bitcoin for investors at all levels in the previous administration. And I will also say that it was the same in Trump 1 compared to Trump 2. I've mentioned on our show, and I've heard, you guys talk about this on Money Talks as well. The administration is taking a hands-off approach to a lot of things, where administrations past, dating back to Obama and probably even before, when I was barely paying attention to any of this stuff, these governments have chosen to really put their hands in every pie they could and sour as many different recipes as they could along the way. This administration has chosen to do nothing in that regard on Bitcoin and crypto. And we've seen an explosion in legitimate vehicles for using it, legitimate businesses. We've talked a little bit on our show about endowments, pensions, state treasuries. Obviously, there's been an explosion in corporate treasuries the last, year or so, 18 months or so. So very exciting times in Bitcoin. And I'm happy to be a Bitcoiner. And I would advise, people who are not in Bitcoin to take another look at this thing with fresh eyes if they haven't in the recent past.
Well, and we had Paul Beatty on BT Global, one of my favorites, great guy too, but a very good analyst, good track record, and saying that they had got into Bitcoin over the last year or so, but I thought it was interesting. He said, because of the convenience, the transaction ability, it's a real challenge to banks. If I want to transfer you money where you are today from me, Bitcoin done, banks, let's go through the process. If I enjoy a bank lineup, it's probably good, but I don't, and just saying the practical applications, we're making the case for it too. I just thought it was interesting. I'm used to people saying, as I have nonstop, the declining purchasing power of your currency, the efforts to, diminish it. That's been a big motivation. The rise in debt, that's another discussion I'll get to. But I loved his practical application rationale for owning it.
There are a lot of good reasons to own this thing as a medium of exchange, as far as, you're right, avoiding things like traditional banking. Mm-hmm. I've been at the bank a few times in the last few weeks to take out cash to build a deck. And every time I was in there, it was more questions. It was people who don't know what they're doing. I don't know if you know this now, the banks at least used to count the money for you. Now they have you count it so that you agree that I'm not sure what value banks are providing these days, but maybe that's just a signal that I'm a little too young to appreciate, the glory of banks in the bygone eras. But, the thing that I think is important in Bitcoin these days, as far as owning it, is In years past, the argument was always about volatility, and it was a fair point. I mean, we've seen 80% drawdowns multiple times, often because people were playing stupid games and winning stupid prizes. You've talked about FTX on your program.
Yep.
We've talked about Celsius on our program, and there's many different crypto, Bitcoin, rehypothecation scams that have gone awry in the last 5 years, let's say. But Mike, in the last 4 years, 3 years, what have we seen? Even while Biden's administration was trying their best to choke this thing to death, we saw the growth of, I think, two big prongs that I will call slow money adopting Bitcoin as an asset of choice. One is treasuries. So whether that's state treasuries, corporate treasuries, obviously Michael Saylor and MSTR, but also we've seen a bunch more, Meta Planet among them. And recently a company called 21, headed up by Jack Mallers, who's the sort of, crypto kid, Bitcoin kid in the United States, with support from Cantor Fitzgerald and SoftBank. I mean, tell me if you've heard of them before, and Tether as well. These guys are becoming vehicles to acquire Bitcoin on their treasury and give people exposure to Bitcoin. So when I say treasury, what do I mean? I mean that they're using this instead of cash or short paper or long paper. And why not? The long bond is producing, 4% or something if you buy a 10-year bond. I'm not sure exactly what the rate is right now, but like we said before the show, the 5-year CAGR for Bitcoin is like 60%. So your hurdle rate as a corporation is significantly different than it was pre-Bitcoin. And there has to be consequences for that in boardrooms. I suspect that there are consequences for ignoring Bitcoin and choosing to go these other routes, while companies like MicroStrategy, Semler, and the like really rip higher in terms of their equity price. So that's one prong. And then the second prong,
let me come to that just for a sec, Joey, because that's sort of the opposite environment that you found yourself 3 or 4 years ago, because there was, your sort of job risk if you jumped into Bitcoin and you had one of those jobs. So now it's the other, you're not in, so you may have a job risk. You have to explain that.
I totally agree. And actually, I was talking to a few friends this morning about that exact sentiment. And if we could look at that as a separate thing entirely, maybe that's like the prong 1A before I go into the second one. The career risk used to be that if you were in Bitcoin and things went sideways, you were cooked, right? You'd be terminated, you'd be persona non grata on all these boards, blah, blah, blah. That has completely changed. And I think that now, people still say that there's career risk associated with Bitcoin and boards are not really keen on voting on this. Microsoft recently had this at their shareholder meeting, adding Bitcoin to the corporate treasury. It received 0.55% of the vote in favor, barely anything. A lot of people saying, okay, we got to look at this. This is not even close to catching on. Microsoft is a tech company. They get this. If there's something to be understood, they understand it, and they're not doing it. This thing's not ready. I would just inform the listeners that back in 2021 or 22, I forget when, a company you may know, Boeing, had a shareholder vote at one of their meetings about abolishing any DEI policies and initiatives at the company. Yep. Do you know what percentage of the vote was affirmative, confirming that they wanted to get rid of that DEI set of policies? What's your guess, Mike?
Oh, it'd be low. It would be very low, I would think.
It was 5.5%.
Oh, I wish I'd guessed, because I was going to say 5.4. Just kidding.
It was 5.5%. And then 3 months later, Mike, all the DEI policies were gone anyway.
Yeah.
And so the changes are not necessarily happening at the vote level. They're happening on the margins. The erosion of what was once a policy position or a strategy or an investment aim that seemed to have the grip of a 16-foot cobra just disappeared in 3 months. And for people who say that that's a one-off, I would also point to stuff like ESG right now, completely evaporating everywhere in the world, everywhere from American companies to Canadian Pension Plan Investment Board, abandoning ESG overnight because it's just no longer feasible, tenable, and palatable, I think, for the people who are invested in those programs. So that's what I would say. These things happen gradually and then suddenly. And I think that suddenly is going to accelerate as more people look at stuff like the CAGR. Now, the second prong is these endowments and state pensions and state treasuries. Like these things, Mike, buy Bitcoin and never sell. Okay.
Right.
They will never sell. We're talking 10, 20, 30-year time horizons. Universities like Harvard and Yale both have exposure to Bitcoin through the spot ETF, through MSTR, and through other vehicles. These are publicly available investment releases. And, as we found out over the last little while, I think most people probably knew this, but if you didn't, these universities are basically just hedge funds. Harvard, in the news these days for the way that they conduct their business. And these guys are in the business of making money and not paying taxes, not having a red quarter, not doing all these things. And so how do you do that? You hold. One of the other legitimate pieces that's come into sort of focus over the last year or so, since January, I think, is this Coinbase lending program. Everyone knows that the most wealthy among us get wealthy by leveraging assets to take fiat loans and watching those assets appreciate and re-leveraging and blah. Everyone knows this. Coinbase now is offering this to Bitcoin holders. Coinbase a few years ago was a wildcat upstart,
Yes.
In crypto. Now, Mike, it's in the S&P 500. And do you know what company it replaced in the S&P 500? Talk about a signpost. Discover Financial. Does that ring any bells?
Yeah.
If you needed more of a signal than a traditional financial service that used to run commercials during the Super Bowl being upended by the crypto company in the S&P 500, I mean, these are telling signs. And for people to continue to ignore this, to sort of tie a bow on this, that's where the career risk is. Now, if you favor Bitcoin, your board appreciates all you've done. And also, Mike, you might wind up in the White House. Okay, JD Vance talking at the Bitcoin conference. Howard Lutnick and Besant, both of whom are Bitcoin bulls. David Sachs, huge Bitcoin bull. Like the career risk is on the opposite side now. If you like Bitcoin, you may end up next to POTUS signing something on TV. I don't know about you, but to me, that doesn't sound like career risk anymore.
No, I mean, and we had talked about this at the time. I thought it was such a milestone with the ETFs coming out with Bitcoin because of the people behind them, because of the institutional financial institutions behind them. I thought, well, there's no going back now. I mean, but I loved your point, and I want people to make sure they note it about slow money coming in. It's not just traders and people, and all legitimate, of course, but looking to scalp, that kind of thing. But I find it very interesting, exactly what you said, when I see pension funds moving in, endowment funds moving in, et cetera. They're not there to trade next weekend. And again, that provides more foundational support.
Yeah, think about even the I just want to say something to Canadian investment funds, Canadian pensions, OMERS and the teachers union here in Ontario. What else do you have to see before you buy Bitcoin? CPPIB. What more do you have to see? CPPIB is in the news these days because there's a lot more eyes and a lot more commentary around how they set their benchmark. A lot of people don't know CPPIB sets their own benchmark. They don't compare to the S&P. They don't compare to, whatever other standard benchmarks there are. They set their own. And Mike, every year they underperform. Their president, their CIO or president just took like a 20% bonus for performance. And, when I think about this, and I think about the situation Canadians find themselves in, basically along for the ride as far as our position in the global economy. We don't have the firepower, influence, soft power, hard power, anything to really dictate terms to any other nation. Certainly none of our biggest trading partners, as we found out the hard way over the last month or so. I say to these guys at the pension and CPB level, what else will it take? And to Canadians, individual investors, what else do you want to see? I realize that there's some, ego blocking investing in Bitcoin because Donald Trump said it on TV and JD Vance was at the Bitcoin conference. And, you might hate that guy enough that you're willing to take a loss in your portfolio and, live a lower standard of living than you otherwise would. But I would just advise these people and everyone listening, again, have a look at this with a fresh set of eyes, because you're going to see in short order incredible amounts of deficit spending here in Canada, incredible amounts of deficit spending in the United States, yield curve control, additional tariffs, additional capital controls. If I had told your listeners, Mike, that in December, I think when I was on here last, or January, if I had told your listeners then that during a Canadian federal election campaign, the candidates would be discussing that Canadians could expand their TFSA contribution by $5,000 if they give that $5,000 in its entirety to pre-approved Canadian companies. That would have sounded nuts because that's like soft capital controls.
Yeah,
And
absolutely.
yet that was on the platform, Mike. You know, like the first salvo for capital controls should be 5%, not almost 50%. And, you know, when you look at all these things taking shape around you, as you mentioned before, and as I've heard many of your guests discuss, and as we discuss on our program, by the time you need Bitcoin because you realize that something is awry in the traditional financial system, or that too many people are telling you where to put your money, or that the incentives are slanted in a way that forces you to lose on your investments as opposed to win, it's going to be too late. It's not too late now. Spend some time, learn a bit about it, and you'll be glad you did. It will influence the way you think about money and finance in ways that you could not have imagined. Certainly it's done that for me, and I could point to hundreds of other very similar cases over the years.
No, it's a terrific point you're making. Sorry, I've got to just give a little plug. Coming up, our shocking stat is about the Canada Pension Board and their remuneration. So
Amazing.
there you go, and not performance based, as you said. But let's finish with this though. Okay, so someone says, okay, I haven't been part of this. You know, I've heard about it. I haven't done. Where do they start? Your advice is great. Learn about it. But if you just said, let me give you 3 things to get you more comfortable with it.
I would love for people to, first of all, understand what Bitcoin is. It's a bearer asset similar to gold. And this is getting into the weeds a bit, but you've invited me to do so with the question, so I'm going to oblige you, sir. It's a bearer asset like gold. You hold it. There's no counterparty risk. Okay. There is no debt associated with your Bitcoin. There is no contract associated with your Bitcoin. You hold it yourself. If you don't want to hold it yourself, if that's intimidating for you or the technicals are difficult for you to get your head around, that's okay too. You can use the ETF. I do not share the view of many of my colleagues that the ETF is poisonous financialization of a pure asset. I think that the ETFs are important, and the idea that Bitcoin is going to become global, value store, a global value store without financialization, I think is a pipe dream. Farmers markets and buying t-shirts at conferences, both great, but you don't get to $1 trillion, buying artisanal honey on the weekends at your local skating rink. So that's I think fine too. The ETFs are good. And the third thing I would say to people, and this is just broad advice about Bitcoin, forget what you think you know about index investing, about metals investing, and specifically about what money is. The governments all around you are printing money. Now, the powers that be at the CBC and other media outlets talking about how it's not money printing, Andrew Coyne correcting economists on Twitter like it's the Twilight Zone out there, talking about this wasn't money printing and publishing, sloppily edited grok responses to people who really do understand how bond purchases and debt issuance work at the state level. These things are happening all around you. And by the time, like I said earlier, by the time you find out, it's going to be too late. And the urgency is going to prevent you from understanding what's going on. So I would say start slow, take it easy. You can listen to our show. I think our show is a good entry point, the Canadian Bitcoiners podcast. And there are many others like ours that are friendly to newcomers. We are not, abrasive with our language. We are not abrasive with our expectations. What we want, unlike when you go to BMO or RBC or TD, when you come to us and ask for advice, I don't get 2 and 10. When you come to me and ask for support on how to hold your Bitcoin, I don't take any fees. I don't get paid by the hour. I'm doing it because I saw what it did for me, and I think it can do it for other people too.
Well, as I say, I think you do a great job. I got to thank you and James Thorne of Wellington Altus, because I'm going back several years, who forced it on my agenda. And I mean that in the best way, say, hey, exactly what you said. Hey, take a look at this. That's why we started to talk about it at the World Outlook Conference.
Think about, sorry to interrupt you. Think about your first appearance on our show. Okay. You didn't know a lot about Bitcoin, but you and I share a lot of the same concerns about what's happening. Now that's so important. Many Canadians are different in the way they think about, how to approach these concerns, but the concerns are the same. Find common ground with people. And before you know it, now me and Mike are talking about Bitcoin on Money Talks. Who would have thought a few years ago? But these things bring people together, and there are solutions that we can work on together as well.
Great stuff, Joey, as usual. Much appreciated. And again, Canadian Bitcoiners podcast. People can tune in there. Joey, thank you.
My pleasure.